What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is a brief Ortex update to give us a baseline understanding of where the short interest is at going into this next trading week. Now, we also have a lot of shares available to be used against us. So there's a large amount of borrowable shares according to Stonko Tracker at the current time. So we're going to cover that as well. We also got some updates directly from AMC and Adam Aron that is essentially saying, yep, we are going to have our earnings on this specific date. But there are a couple of aspects of this earnings that they have not really done before that I think is awesome for AMC shareholders. Now, the bulk of this video is going to be spent on expanding on a lot of the different economic indicators that we have been talking about over the last couple of months. Now, when we think about the overall market, in my opinion, with all of the indicators that we have seen, we are teetering on the brink of a major market event. In my opinion, that is going to be a major move to the downside. We've been over this in the past, how this affects AMC, and we are finally starting to see a lot of these things come to fruition. Now, no dates, no price targets, but we do have some very important dates, economic indicator dates coming up this week, and those really could help the AMC short squeeze situation. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. Again, it costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date with accurate information on AMC, the stronger our community becomes. So coming over to Ortex, we can see that the utilization is at 91.63%. Utilization is one of the main data points that I have really been watching over the last couple of weeks. When utilization goes up, there's less borrowable shares that the institutions can get their hands on in order to short, and that could then in turn increase the probability of having a forced share recall and make it more expensive in terms of the borrow fee rates in order to actually borrow those shares. But at the current time, we're sitting at about 15.21% as the current estimated short interest as the percentage of the free float. Now, going back to this discussion on utilization and the amount of shares that institutions are willing to lend, when we come over to Stonko Tracker, we can see that there are 5.5 million shares available to borrow going into this next week. Now, the last time we saw a large chunk of these shares go out on loan, we did see the day after a pretty significant attack in the shorts. Now, I'm not saying that I'm expecting to see a lot of bearish activity in AMC this week, but this is something that we need to keep an eye on because this is essentially showing us in not the entire form, but this is showing us what a lot of the ammo is like for the over-leveraged short institutions that are trying to push the share price of AMC lower. Now, moving over to this big fundamental date that AMC has coming up, when we come over to Adam Aron's Twitter, August 9th is now the confirmed date for the next quarterly earnings call. It will be webcasted so everybody can listen to the conversations that take place. And for the first time ever, they will be taking questions from individual investors on the call. I think this is a great move for Adam Aron because a lot of people are debating the fundamentals of the business. And I know with the main short squeeze play that is at hand, the fundamentals take a back seat. But in my opinion, it's always good to have good fundamental news, especially in this short squeeze play where the short thesis revolves around fundamentals. It's just good news for us if they can come out and give us really solid information on what the company was able to do in the second quarter and what they are planning on doing in the future. But something to keep in mind is that when we come over here, management will respond to questions about AMC's strategic priorities, business operations, and financial position, as well as on efforts on continuing to enhance our business. Note that at this time, to comply with U.S. securities laws and on the advice of counsel, unfortunately, we are unable to answer any questions pertaining to the trading and price volatility of our securities, including but not limited to the short selling of shares or derivatives of AMC stock. Now, here's why they have to essentially put this out there. They most likely do not have concrete proof to put out to everybody that, yep, this is happening at the current time. I'm assuming that Adam Aron and the executive team at AMC has a idea and a really good understanding, most likely a better understanding of the retail investor of what's going on with their share price. But again, Adam Aron and the executive team at AMC are not so much worried about what the share price is going to do, but create great fundamental value over the long term for shareholders by increasing the value of the business. Now, let's get into a couple of these really important economic indicators that are really coming to fruition throughout the end of this week. We've been talking about these for a while. Hopefully, we've been able to give you guys a really good understanding of what the effects of these different indicators and actions are on the squeeze that we have at hand, but we're going to go over that as well. So when we come over to this article, Treasury Secretary Janet Yellen warned Congress that the U.S. economy faced irreparable harm if lawmakers failed to raise or suspend the nation's borrowing cap, and that the Treasury Department would begin taking extraordinary measures to avoid breaching the so-called debt limit. In a letter to Congress, Ms. Yellen said that the nation's debt will hit its statutory limit on August 1st, that is today, and that it is possible that soon after lawmakers return from their August recess that the United States could face the dire prospect of defaulting on its obligations. Urging Congress to act, she recalled that in 2011, the threat of default caused the nation's credit rating to be downgraded. So there's a couple of things that we need to unpack here. Why is the debt limit so important? So the United States already has a lot of outstanding debt. And in order to sometimes pay a lot of these debt obligations, they issue new debt in the form of bonds. They receive the cash and they issue the bonds to basically individuals in the United States. It could be corporations. Anybody who wants to buy these bonds can participate. But if they already have a lot of these outstanding debt obligations and they hit this debt limit where they can no longer generate enough capital in order to basically pay these debt obligations, they run the risk of defaulting on their debt. Now, in my opinion, I think it's highly unlikely that the United States is actually going to default on all of this debt. But what's important is we need to look at a really interesting word here: downgraded. If you start to see talks of our nation's credit rating be downgraded, there's a lot of things that could take place. When we remind ourselves of what happened in 2011, when the credit rating was actually downgraded, coming back over to the S&P 500, back in 2011, the S&P 500 went from 137, about $140 a share, all the way down to 110 and below. That is a very, very significant decrease. So if we start to see these talks of our credit ratings get downgraded, the United States is going to default, we could potentially see the market really have a significant downturn. And that is going to put a lot of pressure on a lot of these over-leveraged institutions. And the margin calls are going to be flowing in left and right in a larger scale fashion than we would already be seeing them right now. So this is just one of the key indicators that we have been talking about a lot on this channel about the overall market, the health of the market, and where we see the market headed in the near future. But I don't want to scare anybody about the AMC short squeeze. We know there's a lot of over leveraging going on. And when over leveraging happens and the market goes against a lot of these institutions' positions, they're going to have to close out of a lot of these over leveraged positions. Now, we have suspected that AMC and GameStop and a lot of other of these stocks that they have taken out these massive short positions on might be first on the chopping block in order to make sure that a lot of these institutions are maintaining these maintenance margin requirements and are well within these regulatory standards. The next thing that we need to talk about, now it's the first of the month and rent and back rent is suddenly due for millions of Americans who have been shielded from eviction during the pandemic. We only learned of this yesterday. Nancy Pelosi told reporters Friday evening after the White House tried and failed to pass legislation that would extend the federal eviction moratorium. Now, when we think about the economic reopening, we've seen a lot of people go back to work. Some people have been able to get maybe different jobs, but in general, we were expecting to see things start to return to some sort of normalcy. That would mean that a lot of people would start to have more disposable income than they did in the depths of the pandemic. But that is not what we are seeing. When we come over to some of this economic data, U.S. consumers burned through almost all pandemic excess savings as buying intentions crater. When we see here personal savings down, we can see coming down here spending is at a significant low point, meaning that a lot of people do not have money to pay for a lot of these goods. If they do not have money to pay for a lot of these goods, it's going to be a lot more difficult for them to maintain their rent. Now, we've been talking about this situation where the market is really teetering on the brink of collapse, basically for the entirety of how long I've been on YouTube. But what I want to really bring up to you guys is these things take a long time to play out. The market is not a fast-moving mechanism. When you think about the story of The Big Short, This took years, 2 years to fully play out, and they knew that they were right. They were just waiting on the essentially the culmination of events that we are waiting for right now in order to start this situation off. So I am really thinking that we're seeing a lot of evidence that, one, we are correct in what we have seen. We've seen, especially specifically with the AMC short squeeze situation, that there is evidence of a lot of naked shorting or synthetic positions out there due to AMC having a massive spike in failure to delivers and getting on that threshold securities list, along with all of the manipulation that we have seen on this stock day in and day out. When we look at this from a broad perspective, our market is not healthy. We are seeing so many different indicators that, one, the Fed has essentially overcooked the market. They're trying to backtrack, and it looks like this whole situation in our financial markets is getting out of control. It's about to get very exciting, so I hope you guys are excited as I am. So that is going to conclude this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button if it costs you nothing to do it. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great weekend, and I'll see you guys in the next video.